But when they trend, you're basically going to have that strategy go rogue, either up or down. Yeah. If you trade looking for reversal points using RSI conventionally, and yes, we're looking for that elasticity in price and for that reaction around them extreme overbought and oversold levels, then you are also fighting the market, and you're almost poking the bull, right? Bull or bear, to because you're waiting for that big move to happen, and you're hoping for elasticity and a reaction in price at them levels. Now, what we've seen of late, mainly with dollar movement, Euro USD fell through the floor, rallied like fuck, and then fell through the floor again. We've had big moves on USD CAD. Now, we can trade all of them different market conditions, and we can move with the market with our optimizations. But you might also prefer as a trader, hey, I don't like that. I just want to be in trend strategies. I want to be the right side of that move. And that's where I'm at with some of my portfolios. I'll explain what sort of strategies they're trading in a minute. Some of them I can't even fucking remember, to be honest, because it doesn't matter to a point. But yeah, when you're trend trading, your only downside to that strategy is if that trend reverses and you've already got positions open. But with my gold double confluence stuff, the 4 hour would have to be going up and in line with the EMAs. The 5 minute would have to be going up and in line with the EMAs. Me to have positions open and then the whole thing to reverse. Okay, which can obviously happen, but it's going to happen far less than arranging market breakout or trying to fight the market. Yeah. So when you look at probabilities of strategies, I feel that one is far more, makes more logical sense in terms of the downside of the strategy, which every strategy is going to get. So yeah, I'm going to go through an account update. I'm going to show you Circle quickly. A lot of you are in there already, but it is going to be a bit of a job to get everybody in, but we will do that over the next week to 10 days. A book I've read that you've all got to fucking read. If you're serious about success in this arena, self-development, self-awareness is key. And I've read a book that I think is bloody marvelous. And I can't see why people wouldn't get loads from it. A PC that Chris has found on eBay, something about Traders Connect, the meetup I'm hoping to pull together in December, and obviously the questions that have been placed. You can all see me and hear me because you answered me already, so we don't need to go through that. Let's share. Right, hang on. Share screen. Entire screen. Yeah, thanks for checking that, Justin. It is always important. Yeah, it's recording my end. Shows recording in the bottom left corner. Right, so AUDCAD, I've shared this many times. This isn't a very busy strategy in terms of trade volume. So if you look at this back from October, and obviously we're in November now, we've had nothing for November so far, but most of my accounts were off over the last few days, to be fair anyway. So yeah, if you look at trade volume, 297 trades over this 13-month period. When you work that out, that's not a lot. What we've seen with AUDCAD, probably around, I would say between May and August, is it rallied and it fell and it rallied again. And this looks lovely, but let me show you my FX book. It's here. I had this drawdown. This is what we saw on the copy trade at the time. But obviously, I'm bound to put this on the copy trade and stuff when we've had this, up until then. Yeah. So drawdown was high, but we recovered and we banked and we're back out the other side. So it was really a bit of a spell. So is this going to be my first go-to set? No. Is it something I will keep running for another few months because I've built quite a bit of data here? Yes. This here affected my risk-adjusted return to make this not massively sexy in terms of a strategy, right? But if this continues without another one of these for the next 6 to 12 months and gets to 100% with 38% drawdown, that's not a bad place to be. I could also wait for a drawdown position and bulk copy it. I could trade this on a cent account or live capital because it's divisible back to smaller capital with the lot sizes that are used. I could trade it on a prop account, but I have got better strategies. So, you know, that's this one that's running. Not my favorite, but hey, it's running. It's there. It's ticking over. I'm building the data on it. Fine. This is one I started to run from March. This is just the conventional 3 strategies approach on one account. So we're trading trend, reverse, and ranging strategies on this account, and built a lovely portfolio. And it went rogue on one strategy quite quickly. I think it got caught in that reversal downside, or something happened, and it caused me to have quite biggish drawdown after like 2-3 weeks of running. But to be fair, because I've got quite a lot of EPSs, I've got lots of terminals running, I'm not limited on licenses, I just left it. This is the dilemma, isn't it? If I had only had 3 or 4 licenses spare, I might have bin that set file off and either re-optimized it or done something different. But you know, I didn't, and it's running. And let me just show you what I mean by that. So this is this drawdown here. Actually, it wasn't straight away. Actually, was it? It was a good 3 months in, and it's a big drawdown. But I left it running, and then ever since June, we've had a lovely time. And to be fair, one of the things I do now is I'm always checking. I'm almost starting with the lot size that I'm comfortable in trading. Am I comfortable trading 2 lots on 100K prop account relative? No. So I sort of would decide my lot size and really sanity check and be careful with the lot multiplier portfolio builder wants to add in line with my drawdown. If I'm comfortable with like trading 0.3, 0.4 on gold on 100K, and then portfolio builder wants to 10x that lot size for the strategy that it likes in portfolio builder, I won't choose that now. I just feel like that lot size has such a very low spectrum of can't think of the word, scope outside of, you know, how it's been back tested for a few pips, and that you know, that drawdown is going to be a lot higher. Whereas if it was 0.3, 0.4, and I've still got a good back test and the walk forward's right and everything fits, deviation, I can have more deviation in how the market decides to play out and still not catch a cold with it. Yeah. So these lot sizes on some of these are higher than I would like. But okay, so what can I do with this? Well, I've made 100%, 55% drawdown, but only on this here. Normally it isn't. Now, if this was like this all the time, then clearly I would bin that strategy off because, you know, the risk-adjusted return isn't great. But, you know, it's one rogue sort of move or sequence. I could divide this by 10. I could run it a lot smaller. Again, I could use it on cent account stuff. I've got options, but I earn the right to have options by building data over time as well and understanding then what that data's done. Now, on to my 2 most strongest gold strategies.